All right, good evening once again. I want to reemphasize what I was sharing with you the other time about the trending the market directions. And again, you can see the drawings on my screen that's telling you the directions of the market. And so when you begin to see market moving and it's giving you a high and then it gives you a low, then it goes up to break the previous high and create an higher high, and then it has a pullback. Then it go ahead to create an higher high to break the previous higher high, and it keep forming an higher highs and higher lows. We've already established that the market is said to be in an uptrend. The market is said to be in an uptrend. So the market is forming a series of higher highs and higher lows, is in an uptrend. And then we also see the opposite, uh, the downtrend, which is the bearish market. The bearish market, when market is forming series, when market is forming uh, highs and lows, and in this case now, the highs are getting lower than the previous highs. The lows are getting lower than the previous lows. When the market is forming a low here, and this low, okay, and then it forms an high. This high is lower than the previous high, then it forms a low here. This low is lower than the previous low. It is said to be a bearish market. Now let me quickly draw something out for you on my screen. So imagine this is how it is actually formed. So market goes like this. Then it comes this way. Then it goes, it forms. Then it comes lower again. Then it goes up again. Then it comes lower again. Then it goes up again. Now, in this scenario now, so we are seeing something like this. So you're seeing high. You are seeing a high here now. Then you are seeing then you see high. You see a high here. Then you see another high here. And then you are seeing that the highs are getting higher than each other. So each high is now called the higher highs. When the highs are getting to each other, are getting higher than each other, is called the higher highs. Higher highs. Higher is called the higher and that's what we shorten to be, that's what we shorten to HH, higher highs. Higher highs. So when market is forming higher highs and higher lows, so we said now, then again the market is forming a low here, is forming a low here. So you are seeing a low, then you are seeing another low, then you are seeing another low. Then you find out that the lows are higher than each other. As they are getting formed, they are getting higher than each other, so it's called the higher lows. It's called higher lows. It's called the higher low, and then this one is also called the higher lows. It's called the higher lows. So, and then you can just shorten it by writing higher low. Higher lows. Then you can bring it here and call and says higher lows. Now, in this scenario now, you see that the price is moving to the upside, and so we have the longer side is actually the direction of the market. When you begin to see the longer side of the movement, if it's pointing to the upside, that means the market is a bullish market. Look at it again. This is a bullish market. Bullish market. It's called a bullish market. Then it is also called an uptrend. Uptrend. It's also called an uptrend market. It's an uptrend market. So what that means is that market is just literally moving upwards. Market is just moving upwards. So it's an upward market, it's an uptrend. It's just going to the upside. Market is just going to the upside. Market is just going to the upside. I've zoomed this thing too much. So we have this side of the market is what we call uh, the impulsive movement. Look at it like this. Impulsive movement. My goodness. We call this place impulsive movement. Impulsive movement. Impulsive movement. And then let me see if I can change the colors. Change the color to be white, and then the text will be black, and I think it's okay like that. Then we have this side is called impulsive movement. Then we also have this side is called a pullback. A pullback. Always note that that side is called a pullback. That side is called a pullback, and we still have impulsive movement. Impulsive movement. Then we have, and again, we have the pullback. Again, we have the pullback. Again, we have the pullback here. And the pullback also means the retracement. Pullback or retracement, or it also means correction. And then so we are looking on this kind of trade now. Since it's an uptrend, we will be looking for opportunities to buy. We shall be looking for opportunities to buy. The reason I'm establishing this again and again is because if you cannot identify the trend of the market, every other thing we'll be teaching you subsequently will be a waste. It will not even make any sense to you. It will not make any sense to you, because we need to establish this is the the foundation of technical analysis, establishing the direction of the market, establishing the trend of the market. Then every other thing that we need to learn subsequently will now begin to make sense to you. How do I how do I enter trade on a trending market? Because the strategy to trade a trending market is very necessary to trade a ranging market. Okay, so we have the same thing. We have the opposite thing for um for the sell. We have so let me zoom to so let me come a little bit to this side and let me draw the sell for you. So when we begin to see markets moving like this, then it has a pullback to the upside, then it moves again to the downside, then it pullbacks again to the upside, then we move back again to the downside, then there's a pullback again, then it moves this way. Now let me quickly show you something. Every time this is happening, okay, so when the market is moving to the downside and then it's got a particular point, it gets a particular point and it turns to the upside. This place now where it has just turned to the upside has become a support where the market turns to the upside has become a support. Then I need to know. This is annoying me. Okay, continue. Continue. When you can never have one. All right, so give me the hand. How do I want to explain this? So now where the price turn from make this turn has become a support, where it turns to the downside has become a resistance, All of these things are going to be beneficial to you in the future when we begin to look at how to make an entry and exit, when you want to enter trade in the market. So all of these are going to be very important. But I just wanted to be aware of support, resistance, support, resistance, support, resistance. Support is usually the floor, resistance is the ceiling, then support, resistance, and like that. So here again now we have our impulsive movement. We have our impulsive movement. Okay, we have our impulsive movement. We have our impulsive movement. Okay, we have our impulsive movement. Then we have the pullback here. We have the pullback. We have the pullback. We have the pullback or retracement. Okay, so by now you understand what I mean by impulsive movement, retracement, impulsive movement, retracement, impulsive movement, retracement. Retracement also means a pullback, a pullback. And so but there's something very important I need to pay attention to. You discover that the impulsive movement must break the previous support when you are moving to the downside. On the bearish movement, the impulsive movement, it must break this. It must, for this side to be called an impulsive movement, it must break the previous support that was created. It must keep breaking. We call it break of structure. As long as I keep breaking this structure, keep breaking this structure, keep breaking this structure. And what do I mean? Let me give you an example. Let me give you an example like this. So this is what I mean. If you see something like this, it must break this line. It must break that line for it to be an impulsive movement. It must break this line. It must continue to break that line. And as long as the line is getting broken to the downside, we are still in a downtrend. We are still in a downtrend. Now, yesterday I was sharing with you how, now for example, now if you now see something like this, at this price, and then again the pullback, let me show you another thing. This pullback must not break this resistance. This pullback, for example, this pullback must not break this to the upper side. If it break this it must not break this previous resistance. It must not break it. When it breaks it, it's telling you that look, it's like this sell is about to end or a new direction is about to change. So you start at that moment. Now you pause because you likely don't know what to do yet, and that will be what I'll be sharing with you in the next video. What will you do when you see something like this on your chart? Are you going to be buying? Are you going to be selling? I'm going to be share that with you in the next video. So we have this, we have all of this now. You have the bullish. Then the another one I was sharing with you the other time, the ranging market. When you begin to see price moving this way, it's not up, it's not down, it's just moving sideways. It's just like this. In this kind of a case, you'll be seeing you're having a fixed, you're having a support like this. Slow. Then you're having a resistance here. So I said when the market is beginning to move between a fixed resistance and support, it is said to be a ranging market. It is a ranging market. It's a ranging market. This is what we call ranging market. Ranging market or a sideways market. And here now, so what do you do? How do you trade this kind of market? You be trying to, you want to buy, you want to sell at resistance. Okay, you want to sell here, you want to sell here, and then you want to buy. So I said at you buy at support, you buy here. So the rule is here is buy at support, sell at resistance. Sell at resistance. So this is how it works. Then let me quickly show you that on the chart now. Let me delete everything I've drawn on the board here. Let me just show you the real chart. So here now, beautiful. So you are seeing that this is 1 hour time frame. This is 1 hour time frame. Okay, so you're beginning to see so let's say from here now, look at how this thing, you're seeing an impressive movement, then you're seeing a retracement, then you're seeing an impressive movement, you're seeing a retracement, then you're seeing an impressive movement, you're seeing a retracement, you're seeing an impressive movement, then you're seeing a retracement, and instead of this to close lower than the previous support that was created, it had decided to go above this impressive movement. And you can see price literally, so it came here, it's supposed to close lower, it's supposed to close here, but it's not closing here. Price had decided to close in this place, and then it has broken to the upside. This is what we call gap that happens during the weekend. Okay, it's a gap that happens during the weekend. So now, and from there onward, price began to move to the upside. And from this place now, you start thinking, are we still buying? Are we still selling? Then when you start seeing that the price is moving up again, then it has formed, price has changed direction to the upside. Now you have impressive movement, retracement, then we have impressive movement, you have retracement, you have an impressive movement, then you have this retracement. You need to understand that this is a single retracement because it has not broken this, it has not broken that. Then we have so, and then So from here now, you see that now between here and here, between, let me give you this horizontal line, between here and here, you can see the price is literally ranging. Price is ranging. There is no, you cannot tell of a clear direction. Is hitting this resistance, is coming down, hitting the resistance again, is coming down, it hit it here, down, down, then from here up, then all of a sudden it broke up and then came back into the same support again, and then it went back to touch the ceiling, came back here again. That's the ranging market. That is what we call the ranging market. Okay, so now the next I'm going to be sharing with you later on is on this slide here. How to trade a trending market, uptrend, downtrend. I'm going to be teaching you EMA, ADX, trend line breakout, and Fibonacci retracements.